Larry, you've just published a deep dive study on European equity trading and the impact on commissions that war, Brexit, and MiFID II has had. Now, the report has an abundance of revelations, not least around liquidity issues. What were some of the big surprises from the survey?
Rod, great to be here. Big surprises. One is how much that flow is moving off exchange. Right now, roughly 65% of flow is migrated to off exchange venues. I know that there's been a relaxation of some of the MiFID double volume cap standards, but actually a lot of this flow isn't moving into dark pools. It's just being executed through systematic internalizers and traditional off exchange mechanisms, as well as auctions. Auctions have gone up to about 25% of the flow within Europe. So just a huge migration of flow away from the intraday market.
And given that and the pressures exerted on trading flows by fragmented markets, what do you think the future holds for trading channels?
It's really interesting. Certainly, the market can only function with traditional lit on exchange volumes. That creates all the price discovery in the market. So I don't think they go away. I just think that what's happening is because of passive flows and because of the movement towards ETFs and just the difficulty in finding any type of sizable liquidity in the market. Flows are just moving towards the end of day towards auctions, and moving towards mechanisms where somebody's going to, come to me, a big broker, and say, give me a price for this. And increasingly things are moving that direction. Even though trading algorithms are still the most popular channel to get done, it's just a really interesting dynamic that it's just harder and harder to get executed in the middle of the day. And so the push towards reducing trading hours is extremely prescient in Europe.
Understood. And then if we think about investment research, and I certainly remember the early days of the MiFID rollout, and there seemed to be an awful lot of internal pressure, particularly from PMs, to retain a long tail of specialist research. Is that tail still highly valued? And what do you think the survey tells us about rebundling and its potential impacts?
Well, you got a couple of different issues in there, Rod. First, yeah, certainly research has become actually even more important. We've seen the ranking of research in terms of broker services as moving up. So people are more interested in research. The challenge, however, is that we're seeing the regulators move away from unbundling. The traders like unbundling. Overwhelmingly, our traders that we interviewed roughly 90 head and senior traders in Europe, trading Europe. Um, they like unbundled research because to a certain extent it frees them of having to allocate order flow based upon who gave me this report. They can just say, hey, where's the best place to get this executed? What's the best mechanism? And I'm just going to go that way. That said, a lot of the regulators are actually kind of moving away from unbundling because to a certain extent uh, it really benefits the larger players and hurts the smaller guys, and it benefits the larger companies and hurts the smaller entities. So as Brexit kind of pushes the UK away from Europe, everybody's trying to grow jobs, and everybody's trying to grow the economy. And if and as we see, the IPOs have moved to the US from Europe. The issue is how do we get back to a marketplace in Europe where they're actually creating new companies, driving growth and driving jobs. And I think that one of those issues is unbundling. Um, Now, how that's impacted research, we're still not sure. It's not fully done. Certainly, Europe or London, Europe has moved towards rebundling smaller cap companies. It doesn't necessarily work well, but there's a lot of push towards moving back towards unbundling. Um, that said, the larger brokers or larger buy side firms are not fond of this, but this again benefits the smaller guys.
Larry, it's a really insightful piece of research. I think there's a lot for all sorts of market participants in this. Thanks very much for your time. Really appreciate it.